Stocks and news. For that, let's go to our researchers, Megha and Yatin. Megha, you go first with the list of large cap stocks, and DLF looks like they are now desperate to raise money, aren't they?
Indeed, Nikunj, a very good morning, and DLF is in fact looking at selling some of its assets to reduce the huge amount of debt on its books. I mean, the company is in talks with the GIC and Vornado Realty for selling their NTC Mills land parcel in Bombay. They're looking at somewhere between 3,000 crores from the sale of that land, and if this really goes through, it will be a huge positive for DLF. Both these companies are conducting due diligence for buying this land parcel from DLF. Keep an eye on the counter. It's trading about the 20-day moving average, has given a return of close to 5% in the last 1 month. Also look out for Kingfisher and more trouble brewing for the airline. A consortium led by GVK have started legal proceedings against Kingfisher after several checks issued by the company were dishonored. Kingfisher owes close to 60 crore to Mumbai International Airport, and of which they paid 30 crores in checks, all of which got dishonored there. So it's a huge negative for Kingfisher. It also reflects that company is still having problems when it comes to servicing their dues and having problems with their daily cash flow requirements. So look out for the stock. It's technically also it's looking weak, trading below that 50-day moving average. Also look out for Suzlon. The company is going to sell its stake in the China manufacturing unit to China Power New Energy Development for close to 340 crores. An interesting development for Suzlon. Keep an eye on the counter. It is trading below that 20-day moving average, has cracked close to 17% in the last 1 month.
Okay, Megha, we'll leave it at that. Meantime, Yatin's here to talk about small and mid caps, which are the newsmakers today. Yatin.
Good morning, Aisha. It's all about debt restructuring in the mid-cap space. Both the stocks that I have in my list are, facing certain debt issues, and, there is some restructuring that I'll talk about. First, starting with HCC, and the company's lenders under the CDR package are looking to infuse close to 1,500 crores via debt funds, out of which 500 crores will come in from the working capital loans that the bankers would extend, and 1,000 crores will come in from the extended loan facility on a short-term basis. So 1,500 crores is the additional funds that the lenders are ready to infuse, provided that the promoters in their personal capacity infuse 302 crores in terms of equity and provide the personal guarantee. Apart from this, the CDSL is also looking to extend their loan terms to 10 years and also provide a moratorium of close to 9 quarters for HCC, which has been reeling under pressure. Remember, HCC's total debt on the books on a consolidated basis is over 8,000 crores, and this kind of a lifeline, possibly in 1,500 crores of debt and 300 crores in terms of promoters equity infusion, would surely help the company maintain its liquidity position in the near term. The stock has not really done much for itself in the last 1 month. However, it's up 16% on a YTD basis. Then we have IFCI, which continues to be news, and the Economic Times has reported that the government is looking to convert their 523 crore worth of debt into equity. Now, if the conversions take place, the government stake in the company will increase to 40%. Remember, the government does not hold currently any kind of equity proportion in IFCI, but the financial institution do. And given the fact that they are having a tussle with the company board, clearly government is looking to convert this particular debt into equity.